We appreciate you all coming, and we hope that you enjoy holiday classics like It's a Wonderful Life. But we want to remind you that here at Argent, we say it's a wonderful market. Now, granted, we've talked about how there are going to be pockets of weakness, and we certainly expect 2018 to be not as strong as 2017, more modest returns. We've talked about pockets of concern in the Bitcoins where they're difficult to understand. We've talked about how the Federal Reserve has a lot of assets that they're unwinding. We don't know how they're going to do that. They've never done that before. We talked about the unknown in taxation, right? So that's always going to be concerns. But we want to remind you that there's also very strong parts of our economy, right? The taxation, like John talked about, could actually be a positive to earnings. Large cap, mid cap, and small cap, especially if the corporate tax rates are lower, they're going to have higher earnings, right? The consumer is still 70% of our economy, and going into this holiday season, all the trends that we've been seeing in the holiday spending have all been positive. Higher growth this year than last year, right? Ken talked about global synchronized growth. That's an important part of the world economies improving over the year. We talked about housing, we talked about jobs, we talked about wage growth, and most importantly, we talked about how earnings for the companies themselves continue to improve. And so that's why we continue to see a lot of investment opportunities if we're selective in nature across all of our products. Large cap growth, dividend select, mid cap, and small cap. So of course, we're going to end with the most important clip from It's a Wonderful Life.
Look, Daddy, teacher says every time a bell rings, an angel gets his wings.
That's right. That's right.